Welcome back to the channel, man. Today we're gonna continue the series of market structure. So if you have watched the previous video, you will know that we stopped with just a bit quick of a recap. We were discussing the three different market structures. We went over downtrend, which is basically a down moving market, creating lower lows and lower highs. We also went through a ranging market, which is basically the market is consolidating, going from roof to bottom, basically without any direction bias. And then we also covered a uptrend, which is basically a market that's creating a higher high, higher low, higher high, higher low, and then of course identifying this as an uptrend or a bullish market. Okay, so we had covered all these three markets. We also discussed that the market, say for example, the market is moving towards the downside. The only time we want to switch our bias is when the most recent, for example, in a downtrend, the most recent lower low. Let me just adjust that. The only time we want to switch our bias is when the recent lower high gets broken in a downtrend. That's the only time we're looking to change our bias. And that's of course when it gets broken, then we're looking for a retest example and then looking for continuation back to the upside. That's when we're looking to see the trend change. Then we also cover the downtrend, uptrend. We say that the only time we want to switch our bias from an up moving market to down moving market is once the market breaks the higher low. Okay. Um, Once the higher low gets broken, that's the only time we want to switch our bias. Or we can then start looking to switch our bias in anticipation of a retest and continuation back to the downside. Okay. So Alright, and that was all on last week's video. Okay, the recent video that I've made on market structure. So today we're just gonna go over the deeper concepts and what really are we looking for in this continuation pattern. So in this situation, we're looking at this break and retest in a uptrend, break and retest in a downtrend, and of course with the ranging market as usual, we usually would just avoid it or stay out of it. And then of course that's usually when you have like about three touches from the top and the bottom. We will then consider that as a range, okay, because we don't have any direction bias. um so that was all covered down in the previous video. If you haven't checked that video out, you are more than welcome to go and check it out. But in this video we're just gonna go into more details on market structure, and yeah, just break down what exactly we are looking for. um this is one of the things I hate about doing this like one by one. Takes quite some time, but let's get to it, man. It's a vibe, it's a movie. So today we're discussing how to go with the continuation of a trend. Okay, so basically we're looking for continuation of the trend. In this case, we're not looking at any ranging markets. Like with the ranging markets, we're of course avoiding it. So we're only focusing on trending markets, which means when you come to your charts, you look at your 4 hourly charts or the daily charts, you will identify, is this market pointing towards the upside dominantly or the bias is towards the downside. And then from there onwards, you are looking to take trades in continuation with that actual trend. So in other words, if you come to our charts, the market's creating lower low, lower high, lower low, lower high, okay? And we come to our charts, we see it's creating all this lower lows and lower highs. This means that the market is dominantly pushing towards the downside, okay? This does not mean that the market does not create minor movements back to the upside. Once in a while, blue moon, you'll see a small movement back to the upside. That's usually what we call our retests. So this is absolutely okay. We are going to get these minor movements back to the upside once in a blue moon, okay? But that's not what we're looking for. We're all looking for continuation. So when you come to your charts, of course, like I said, you're looking to identify first of all where the dominant trend is. In this situation, the trend is pushing towards the downside. Okay, that means we are looking to take continuation trades. In continuation trades, all that you need to identify is the trend, the phase of the market. Okay, and then once you identify the phase of the market, understand your candlestick analysis. That's basically it. Okay. Again, I'm not a financial advisor. I don't have the holy grail menu standing in front of me saying that this is the way that you're gonna become a trillionaire overnight and buy yourself a Lamborghini and a Rolex. Not saying that. These are all concepts that we have been studying for past data, and we basically use this as key to us making tradable decisions. So hope you understand that. Again, You have to identify the trend pushing towards the downside. Fine. Once you identify the trend pushing to the downside, you have to identify the phase of the market. So within the trend, there are phases. Okay, like the small little movements to the upside is a phase. We call this an exhaustion phase. The reason why we call it exhaustion phase is because the market's overall movement is towards the downside. However, when the markets does create a small little movement back to the upside, we call that an exhaustion because the majority of the movement is pointing towards the downside. So when you do see that small movements, that's only an exhaustion. The market is basically regaining its steam in order to continue going to the downside again. And I hope that concept makes sense. All right. So in this situation, you want to come into your chart. Let's say, for example, this is where your market is at. Okay. You come into your market, you have to identify, remember, rule number one is a trend. Okay, the trend is down. Second question is the phase of the market. In this situation, if you look at the markets looking like this, we are currently in a push phase of a downtrend. If you're not taking notes, I'd recommend you to do. I always say that in all my videos. Take notes. It's gonna help you go over it, study it, go on your charts and practice and all those type of things. That's how you get to learn these things. You don't just learn by hearing me speak or whatever. You have to take notes of the stuff. Go home, do some have some diligence and basically go through some live market backtesting sessions so that you can see how all these things come together. So downtrend, ask yourself the phase. You've got a push phase and exhaustion phase. A push phase is this phase that we're currently in here. This is a push phase and this is an exhaustion phase. This is a push phase, the small movement up here, exhaustion. This is a push phase. So when you come into your charts, second question is what phase are we in? And as you can see, we are currently in a push phase. When you have a push phase in a downtrend, what are you looking for? You're looking for an exhaustion because that's just how markets move. It's not about oh so and no, no, no. It's just how markets move. When a market runs for quite some time, it hits a bottom, it creates an exhaustion phase, and then it continues going to the downside. Hence is why your charts might not look as clean as this example, but that's why you see all these movements going up and down and sideways and all those type of things. It's because the market can never just go one direction up or one direction down. What the hell? Who's trading then? The whole concept of trading is that someone is buying, another person is selling, and the cause of that is why we have all these movements going up and down and sideways. If that makes sense, guys. So ask yourself what phase are we in? In this situation, push phase. And if you are looking at your chart, remember we are in this video covering continuation. Okay, we're no longer doing counter trend trading. So that means you are working with continuation. When you come into your charts, you see a push phase. That means that you are gonna have to wait for an exhaustion phase to occur before you can take a trade. Okay, in a downtrend, of course. So in this situation, you can see in a push phase, what comes up with the push phase is an exhaustion phase. Once you're in the exhaustion phase, that gives you the signal that the market could potentially now starting to stall down, and that we could see these sellers step back into the market. Okay, so in this situation, push phase, look for an exhaustion phase, which is this level. Once you have an exhaustion phase, the third step is to look for candlestick signals. What type of candlesticks am I talking about? You get engulfing patterns, you get rejection candles. But in my situation, I usually when I see this, I want to see rejection candles. Okay. On my smaller time frame, for example, scaling down. I won't make a video on that. We're not gonna cover that over here. Um, but I want to see small candlesticks with small bodies, big wicks. That gives me a signal that the market could be rejecting that specific zone. Okay. So in this situation, that's the situation over there. You want to see the market come into this level, okay? And once it does come into this level, you want to see the candlestick starting to get smaller with big wick rejection. A wick is basically a signal that the market is rejecting a specific area. So you want to see small wicks, small body candles, and you want to see maybe big selling candles starting to step in. That's going to give you an indication that sellers are stepping into the markets and that this area could be potentially strong and holding. Okay, hope that makes sense. And then of course, once you have the third confluence, That's when you can then start thinking to take your trades. Perhaps you can scale down and look for other you know, confluences like trend change and all that type of things. But in the situation, you then take your trade, and then your target to be, of course, for a new low to be made. Okay, so you want to see the market go from here all the way back to the down here. Why? Because that's how markets move. Creates lower low, lower high, lower low, lower high. Okay, hope it makes sense. Okay, that's a downtrend. Let's cover uptrend now. Guys, same thing, same concept with the uptrend. You want to come into your markets, you want to see that the market is dominantly pushing towards the upside, not the downside. Okay, so it's creating high highs and high lows and continuing back to the upside. So once you come into your chart, you identify the trend is moving to the upside. Once you identify the trend is to the upside, you ask yourself the second question: what phase are we in? Okay, so let's just say the market was looking like this. If the market was looking like this, then you come into your charts, then the question is, what phase are we in now? Of course, we're in an exhaustion phase. Why? The dominant trend is towards the upside, and the current phase of this up movement market is currently in exhaustion phase. It's pulling back. Okay, and because it's pulling back, what does that mean? We could look for potential buying opportunity because it's back at a level where it could retest. Okay? Because in an uptrend, when the market is trending towards the upside, creates higher highs, higher lows, higher highs, higher lows, higher high, higher low. Okay? Higher high. You get the point, guys. That's just how an uptrend moves. Okay? So when you do come to markets and your chart look like this already, then you need to know that we are currently dealing with an exhaustion phase. And within an exhaustion phase, what you want to do is you want to see the market get back into that area, okay, where the most recent higher high was, okay. And then what you want to see now, third thing is candlestick. You want to see big weak rejections at this phase. Big weak rejections weeks is going to give you signal that the market is rejecting that area. And then the other thing is you want to see small bodies with maybe big wicks, like I said, and you want to see big bodies like big buying candlesticks stepping into the market. That's going to give you the signal that, hey, buyers are potentially stepping back into the market at this level. It's basically a confirmation that the level is holding and is strong. When you start to see small wick candles coming into that area with big buying candles, it just means that sellers are diminishing and that buyers are starting to step into the markets and dominantly starting to potentially take over the market. And then that's basically confirming that this area is holding and strong. So in a situation, you want to obviously then look for your candlestick analysis. Once you have your candlestick analysis, you then want to obviously go ahead and take a trade. Does this mean that the market is in a that the trade is in a win? Promise you not. That's never a guarantee. Okay. Does that mean that the market is good? Does that mean that you can't lose a trade? Of course you can lose a trade. That's why we trade. In any case, is because we are relying on probabilities over the risk. Okay, so we work with risk and reward ratio here, and we're relying on past data to give us that confidence we need in order to take the trades. So in this case, you wait for the market to come back to this area, give you the signal that you need, which is your candlesticks, whether it be engulfing patterns, whether it be doji candlesticks, morning stars, whatever your case we want to call it, and then from here you're looking to take this trade back to the upside. And that's basically that, guys. We're gonna go through the live market and we're gonna try identify some areas in the markets where we can see these examples over here. Okay, so in the live example, we're gonna see now. What can we see? What can we see? What can we see? Okay. I just choose one or two examples. I'm looking for continuation examples to give you. So let's just say, for example, okay, here we go. Here's a nice, beautiful leg pointing towards the downside. Remember, the first thing that you want to do, let's just say the market is looking like this. Granted, this is past data. I'm basically showing examples of things that already has happened, but don't be a complete douche and focus on that. Like focus on the concept I'm trying to make. Like focus on the point that I'm trying to bring across. Don't focus on yeah, me bro, but that is like stuff from no, bro. Relax, calm down. Focus on the concept itself. Okay, because this is what you are gonna need in order to execute trades in the live market. So don't sit there and be like, yeah, but he's making examples, things that happen already. I obviously can't make examples of a current live market because I'm gonna have to wait for about what 4 hours for one candle to close or whatever the case may be. So don't be that guy, bruh. But in any case, you're waiting for the market to identify the trend. Okay, so now you can see that the market is currently in a downtrend. Okay, or let's just make example of this over here. I think it's much more easy for you guys to understand. But in any case, if we have an uptrend over here, okay, the market's moved towards the upside, and we can see that we created a high, a higher low, a higher high, a higher low, continuation, guys. So when you come to your markers, the market is looking like this, for example, okay, which is this big black candle over here. This is what we're looking at, this big black candle over here, okay. What do we know about the uptrend? We know that when the uptrend is going up, it creates higher highs and higher lows. So where's the area of retest? We're gonna have to identify area of retest, which will be this level over here, okay? Which means the market could return back to this level before it continue going higher. Again, focus on the concept. Learn. Now, the market come back to this level as you can see with this big candle over here. And what we're looking for is we're looking for a retest of this level, anticipation of a continuation, guys. I can't stress it more. I just showed you what I just told you now. Okay. This is basically how the market moves each and every single day. Granted, you are not going to win every single one of these trades. There's gonna come trades where the market's gonna come into this level and even give you the candlesticks you need, and you're still gonna lose it. Okay. So the goal is not to be worried when you lose. The goal is to be consistent with the trades and have a fixed risk to reward ratio and the risk that you always expose into the market. Okay. Don't be that guy that you are taking trades and then when you do win, you're winning like 500 rand. But then when you lose, you're losing like 2,000 bucks. You know what I mean? Then that means that your risk management is out of order. You need to work on your risk management. Okay. Whereas to get guys that maybe they take a trade, they're losing a 500 rand on each trade. When they do win, they're making about 5,000 rand. Okay. So they're basically making back the losses because of the risk to reward ratio that they have and the discipline that they have towards the risk that they expose in the markets. Okay. It's consistent. So this is example number one in the live market. Again, this is an uptrend. We can see a downtrend right here. Okay. The market is dominantly moving to the downside. Look what we have. We have, let's just say, okay, market, of course, that range here for a bit. Now look, we have a low, a retest, okay, lower low, a pullback, lower low. What are we looking for? We want to identify the phase. So let's just say we came to the market. The market looks like this, like how it looks right now, which is at this level over here. We want to identify the phase, or first of all, identify the trend is down. Second question is, what phase are we in? Phase is push phase. If the market looked like this when you came into it, what are we looking for in the push phase? You want to see an exhaustion, which means the market has to go down, create a low, push phase, has to create a pull back again, an exhaustion phase again. So in this situation over here, we have a push phase. What are we looking for? An exhaustion phase, and then look for continuation back to the downside. And what we have a push phase, wait for an exhaustion to be created. There's the exhaustion. Okay, there's your exhaustion. And I'm gonna use my arrow, exhaustion, and then what you want to do once you have an exhaustion, look for your candlesticks in anticipation of a continuation to the downside, like that. Okay, guys, this is just basic concept. I try keeping it nice and simple. Of course, when you have ranging markets, avoid ranging markets. It just means that buyers and sellers aren't dominant in the market. And if you do take a trade, you basically, I don't know, man, you're just playing with fire. So you avoid ranging markets. Guys, hope you understand the concept. Again, hope you took notes of these things. Go through the video again if you didn't understand the first time. Check it out. Take some notes down because that is what's going to help you in your learning curve. Um, and again, man, there's still more to go into it. We are going to discuss more about candlesticks in the next video. But I hope you understand the concept and you learned something new today because that's basically why I come here on this channel and dedicate my time to make these videos. If you enjoy the content, you know what to do. And until next time, I will see you.